Hello, welcome all the viewers again to another video on REITs and InvITs, and I'm Gaurav Jain. You can take a copy of my books which are available online. These are the two books that you can see: Real Estate Investment and Financial Analysis and REITs and InvITs, What's New in the Stock Markets. These are available on Amazon also. So we also have a discussion group. It's a WhatsApp chat group, and the group link is given in the description below. You can know much more about REITs and InvITs at reitspro.com, which is a dedicated site for REITs and InvITs only. Today's video is about a market roundup for the year 2023. So we will be focusing on some major developments in the REIT and InvIT space in India. And no, this is not a comprehensive one. It's an overall, it's something that will give you an overall picture. So number 1A, we have budget, which has in February, which taxed amortization on distributions given out by the REITs. Now for this I have already made a video, but to give you briefly, a substantial portion of the earnings was proposed to be taxed, which was not so earlier. So briefly, REITs and InvITs distributes interest, dividend and amortization of loan. This is the total. The total of this is called distributions, and out of this, amortization of loan was not clear and it was not being taxed explicitly, and now the taxation of this amount has started, has been proposed and is going to happen now. And then there was a price crash also because of this. Why? Because the returns became lesser. That is why if you see Embassy Office Park, just soon after the budget, it crashed tremendously. Having said that, now there has also been an amendment recently in the March 2023 time that the REIT InvIT amortization treatment has changed now. So earlier it was treated as income from other sources, and now it's proposed to be treated as return of capital, and this would entail reduction from cost of acquisition. So if you want to read the complete amendment, you can pause here and see this and understand more. So in a sense, it's giving some relief to the unit holders now. Now the second one is that recently in March 23 there's been an impact on debt funds also. Now the debt funds have been taxed now, and 20% capital gains after indexation has gone away. So now they are at par with FDs, and the impact on REITs and InvITs, what's it going to be over time? So markets also probably estimate that money which was earlier put into mutual funds now would go into FDs, and people would also start considering REITs and InvITs, because as we've seen in our earlier videos how stable and high yields can be given, and there are some taxation benefits also in case of REITs and InvITs, both in terms of the returns that are given as well as at the time of selling REITs and InvITs. Number 2, we have the fact that inflation and interest rates have been on the rise during this year. So inflation was probably looking to be tamed in something like November 22, but that has not happened, and the fear of inflation has not gone away completely. Because of this, now what is happening is now realty is in a better position post-COVID, but the REIT appreciation gets limited because the price is defined mainly by the cash flows in REITs. So that's why if you see, overall the situation is that realty has done better, but REITs have yet to catch up on that. And if you also have a 10-year bond view, so this is the kind of thing. So there's been an increase on interest rates in India over a period of time. What is happening is that the expectations from a product change. So the price doesn't go up because the market requires more and more yield compared to what it was getting earlier, because the interest rates have moved. And of course we've seen the impact of COVID earlier, plus at this point of time there has been a taxation impact also. So they've not caught up as far as REITs versus realty is concerned. So number 3, we have new launches and related news in the market. So what's it? So there has actually been no new REIT or public InvIT launched, but there are several private InvITs, and you can see that on the SEBI website there are several private InvITs which have been launched. And just to update everybody, the last REIT was in 2021, which you all probably are aware of. It was the Brookfield Reit, and the last public InvIT was the PG InvIT in May 2021. So after that, there has been no listing in this space. So we currently have 3 REITs and 3 InvITs which are listed, and no new REIT or public InvIT has been launched. However, the NHAI launched something called the NCDs for retail investors. Some people used to get confused at what is NHAI InvIT issue. So for that, there is a separate video. And October 22, they had NCDs for retail investors, which gave an 8.05% return. And InvITs, there were several planned by NHAI. And when will there be a public InvIT on the road sector? We are yet to see that as far as NHAI is concerned. And then if you see, there has been news like the Blackstone has filed for Nexus Select Trust. So that's a portfolio of several shopping malls and so on. So they filed for the IPO for that also, but it's not come out as yet in the market. And DLF has already said in February that it has no plans to launch REIT public offer in the next 12 months. So that's the status as far as new REITs and that news is concerned. Number 4, there have been some pretty large trades in the markets, and a lot of equity in the REIT and InvIT space has changed hands. For example, the unit holding patterns at the date of listing for Embassy REIT was about 70%. Now in July 31, it's become 44%. The data is from this site and SEBI site, and that means the promoters have done away with certain part of their holdings, which is obviously natural. For that, there would be a separate discussion on that. But the large deals have been something like this. So Blackstone sells 400 million stake in Indian REIT Embassy, and ADIA eyes the investments. Similarly, Blackstone sells stake in Mindspace. Blackstone in fact exited Mindspace, selling its stake to Abu Dhabi Investment. And similarly, some large shareholders in Embassy also did transactions with big funds in the year 2022-23. Number 5, there have been certain regulatory changes also. The REIT and InvIT regulations happened to come out in 2014. Thereafter, there have been several changes. And in 2022 November, we had a full set of updated regulations. Again, in February 2023, there have been very much updated regulations. These are both available on the SEBI website. Now, SEBI permits, for example, things like SEBI permits REITs InvITs to issue commercial paper. These were some big news that made the changes possible. And for example, in February also, there were some regulatory changes regarding auditor appointments and leverage thresholds, distributions and investment managers and so on. And the amendments, of course, are here to stay, and they would keep happening. For example, there were amendments proposed to increase the sponsor holding throughout the period of the REIT, as it's given here. Then there were, of course, miscellaneous market news. For example, a lot of people had jitters on Brookfield Reit when the US parent had pressure on withdrawals, and they stopped withdrawals. So a lot of people also took it as that REITs are not doing well, and look at this, that Blackstone, this has happened with Blackstone, but that was for the US markets. That's a very different story, and that was a private REIT. So here in India, the regulations are different. That's all one could say on that account. And let's see how the time goes. But this is what briefly 2022-23 came about. There, of course, the whole recap is not about everything, but more or less the major points we've covered. You can mail us if you have questions. You can mail us at this ID. You can also connect with us on WhatsApp and Telegram. And we've already mentioned that we have a WhatsApp discussion group where one keeps getting updates on what's happening in the REIT markets through a platform of like-minded investors. So thank you so much for watching this video.